Still on the third part here, specific data to look for when analyzing major economies. And after the GDP, it is time for the personal income and personal spending. We are at the end of analyzing the United States of America, and personal income is one of the things to take into consideration. Not really much to say on the personal income indicator side, with the exception that it is released by the Bureau of Economic Analysis, and it shows the change in total values of income received from all sources by consumers. So again, the change in total values of income received from all sources by consumers. It is highly correlated with personal spending that will come after this indicator, with personal spending, in the fact that they are released at the same time during the same day, and the correlation comes from the logical assumption that there is virtually impossible for personal spending to increase if there is no additional disposable personal income. So an increase in personal income is mandatory for personal spending to increase. If actual is higher than the forecast, this should be viewed positive for the currency. If actual is lower than the forecast, this should be interpreted as being negative for the currency. I would say most likely in the United States to be the first one to favor the risk-on environment, and the second one to favor the risk-off environment. They are also called disposable personal income, and like mentioned earlier, it is strongly connected with spending. The more income, the more likely consumers will spend more. The most important things to take into consideration when looking at the personal income are the release date. It is coming on a monthly basis, 30 days after the month ends. The release time is 12:30 GMT during the North American trading session, and this is a second-tier data. It is mostly ignored by markets if the actual not differ widely from the forecast, and also it is being let's say ignored because it is being released on the same day with other important economic indicators. So traders tend to, let's say, not pay attention to this one, but it should come on the top of the list. Looking at the past 6 months data on the personal income, you are seeing that after a dip in February below minus 3.5%, we had only positive months from March until July, with May being on the zero side, but nevertheless the other ones were on positive side. But we cannot take an appropriate trend, or let's say to identify a trend based on this, so I would not really draw a conclusion based on this chart. Now, together with personal income, it comes personal spending in the same day, being basically released on the same time, and personal spendings shows the change in inflation-adjusted expenditures by consumers, and it is released by the Bureau of Economic Analysis, and like the previous indicators, personal income, it has tight correlation with it, in the sense that, again, no disposable income, no rise in the personal spendings. You will see that looking at a 6-month worth of data, and after the spike in March this year, we had decreasing values for the indicator, and not necessarily a negative trend, but a decreasing one. What we should have done, but we didn't, but what one should do is to look at those two charts, personal income and personal spending, at the same time, because if the first one is not rising or is decreasing, it is unlikely for the personal spending to rise or to increase. So they should be looked at together. So it shows the change in inflation adjusted of all expenditures by consumers, released by the Bureau of Economic Analysis, and it is tightly correlated with the personal income. No income, basically low spending levels. The release date is on a monthly basis, 30 days after the month ends, 12:30 GMT during the North American trading session, released together with the personal income, and there is a second tier data. For those of you that do not know what second tier data means, well, this means that markets usually do not move, or they move slightly on the release. If you are seeing markets moving surrounding the release of personal income or personal spending, or actually on any other second tier release, then probably the reason for the move is not the economic release by itself, but something else, either a speech of somebody else, either somebody's holding a press conference or something like this, or basically some other news is being released in the same time, and you are looking at the wrong picture. As you can see here on the personal spending, we had quite an increase on the March month. This is the 6-month back period that we are analyzing. February till July 2013 on the horizontal, and then on the vertical the percentage change on a monthly basis. So 0.2, 0.7, 0.2 again, 0 level for May, an increase in June and July, but personal spending decreasing basically on the last, I would say, 4 months, excluding this June. Now couple this with the personal income. Let's go to the personal income a bit. Couple this with the personal income, and you are seeing the decrease in personal income from March till July, and it was impossible for personal spending to increase from March till July, so the personal spending coming on the soft side as well. This is how tightly correlated they are, and this is why I chose to present them together. Now if you are trading binary options and you are trading options on short term with short term expiration date, and you are looking for them to expire in the money and need volatility for that, well, these are not the most important indicators to look for under such approach, but look mainly for more important ones like the CPI, like the GDP, and so on and so forth. We'll move again with our project, and our last indicator for the United States of America. As you can see, 27 indicators for the USA, and the last one is pending home sales. Now this pending home sales is a tricky one, because pending means that the sale is not done, the transaction is not closed, the transaction is not sealed, and it may not be done. So as well, this is a second tier economic data, but because it is referring to the housing market, traders take it into consideration, and in fact any information related to the housing market is being treated with respect by traders since this financial crisis that started in the United States. But this would come in the next recording. We'll have a whole recording dedicated to pending home sales, coming back to personal spending and personal income. Basically they are being released at the same time, 30 days after the month ends, 12:30 GMT, during the North American trading session. Second tier data, both of them, low levels of volatility are expected surrounding the data. If you have volatility, then either the miss is from the forecast, either the actual differs way more than the forecast, or something else is happening in the market and you are not aware of that. Now stay tuned for the next recording, because we are going to take a look at the pending home sales.